Hello friends, welcome to my channel Simply Stocks, and today I'm going to talk about Bharat Forge, which is looking attractive at these levels. So let's discuss about the valuations part and how it looks from a 2 years point of view. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Bharat Forge, a small request: can you support me on Patreon? Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. Established in 1961, Bharat Forge manufactures forging and auto components for heavy commercial vehicles, medium commercial vehicles, and have exports to North America and Europe as well. It is a part of the Kalyani Group. They have also businesses in power, construction, marine, railways, oil and gas, as well as defense. The market cap of the company is around 36,000 crores. If you look at the financials, then sales went up by around 35% to around 2,850 crores, whereas profit went up. So profit remained flat over you can say 1 year basis. So we have 160 crores of profit coming in versus 153 crores. It's a debt-free company, but doing well in their smaller businesses like defense, etc. So hopefully would come out with better numbers as we go along forward. We'll discuss about projections of numbers going forward in this presentation. ROE for around 16% is the best in this business at the moment because the automobile industries have gone through a lot of stress. Margins at 15% is pretty decent. If we look at the results at a glance, then margins are down 600 basis points year on year and remain stable quarter on quarter. And the margins are down 200 basis points compared to June 2019, which is fine because you need to understand that the business completely got stalled in FY21 and is coming back into shape. Remember, it has a big chunk of business in Europe and US as well. We'll discuss about the geographical split also later on in the presentation. But they have businesses all across the globe, and that's why probably their Europe and US business is not doing that well. And so the numbers are ought to be weak, and that's why having you can say margins nearly same as 2019 is a commendable effort. Sales growth of 20%, over 20% from 2019 is even better because the auto industry per se has gone through a big turmoil over the last 4 or 5 years. Reserves have consistently increased and have doubled over the last 6 7 years, and that has helped them to acquire companies. We'll discuss about the acquisitions as well, or the SPA agreements that they have had already. And the investment from DIIs have consistently increased over the years. And the demand to come in from FY24, I believe global economic environment should get better from April, May onwards. I think Europe should recover by the summertime. So FY24 should be good and numbers are set to improve by that point of time. So a clear play on global economy is something like Bharat Forge. If you look at the revenues, then revenues has come back to where it were in FY19. Now remember, these revenues are taking out the extraordinary. So I have not taken an extraordinary part or other incomes or major other income that has come in because of stake sale or anything that they have got a tax write back, anything of that sort. This is a clear income per se that has come in just about 10,800 crores versus 10,350 crores in FY19. Why I'm comparing from FY19 is because in FY19, FY20, the numbers were much in line in terms of beyond. It was all before the pandemic time. So if you look at in FY20, the numbers were 8,150 crores, and this was majorly before the pandemic, and now the numbers are 10,800 crores or so. So there is a sharp improvement of 25% in terms of sales by FY22 and FY23. Things have started, things are much better now in the revenue terms. In terms of profitability, also FY20 saw profits of only 350 crores, and FY22 now we are seeing 1000 crores of profitability. Again, much better than what was envisaged. And in FY19 we had profitability of 1033 crores, now 1080 crores. It has improved, in fact, over the last 3 years. If we compare from FY19, even from FY20, we are 3x to those numbers. And remember, even in FY20, it was the last 1 month or so, last 1 or 2 months of the last quarter that got hit globally because of the pandemic. Otherwise, 3 quarters were pretty good. So, in that sense, the numbers are pretty good in terms of profitability also. And the margins have also come back. So from 20% in FY19, it dropped to 13% in FY20, remained there, but now it's coming back to 19%. This quarter margin was 15-16%. I think it is set to improve in the next 3 quarters, and by FY24 end, we are going to see margins improve sharply, and we should see 19-20% margin in FY24. Coming to the sales segment wise breakup at the moment, so steel forging business at the moment contributed the most for them, which is 97% of the business. Front axle is around 1% and 2% come from crankshafts. So their major business is steel forging or forging business, that they divide into, you can say, heavy commercial vehicles and medium to heavy commercial vehicles, plus they make other kinds of products as well, which are more defense and aerospace related. The business comes from there as well, but that is pretty minute at the moment. But major business comes from steel forging. So in terms of year-on-year product-wise performance, the forging business has performed pretty well with 35% growth year-on-year, if we see, and the other businesses, the 3% component remained in losses from 15 crores. It has gone to around 21 crores. The profit margins have dipped. So in the forgings business, it has dipped by around 400 basis points from 16% to 12%, and in the other businesses that we mentioned, which were 3% of the total business, the margins have dipped by around 300 basis points. In terms of industry breakup, so automotives contribute to around 60%, industrials contribute around 40% to the total sales, and industrials include your aerospace and your defense business, which is now picking up big time with a lot of defense orders, with the government opening up a lot of defense avenues for major, you can say, private companies. So over the next couple of years, we'll see that swell up. So industrial business should swell up, plus with the automotive businesses across the globe picking up, and hopefully economy picking up in Europe from FY24. I think next 3-4 years could be really good for a company like Bharat Forge. In terms of manufacturing breakup, as to where the manufacturing facility is and where they manufacture big time, and the sales coming through. So India, they have 65% of manufacturing sales coming from here, and this is where the problem lies, and why the stock is not doing that well, because 30% of their business comes majorly from Europe, and Europe is under a lot of stress with UK really going under with a lot of debt and problems with fuel and electricity, and the cost rising and inflation and so on and so forth. And Americas, they have 5% of the business coming from there. So they have manufacturing facilities there primarily because they get businesses from there which is of similar nature. I believe that this thing should get rectified and should get better from middle of next year. So that's why I'm stressing on the fact that FY24 could be big for these types of companies, and numbers should improve going forward. So as I mentioned, so the manufacturing breakup globally has been in the sense that India contributes around 65% of the business for the company, but around 35% of the business comes from global, say, manufacturing and sales. So in that sense, the numbers are set to improve only from FY24 onwards. So in the next few weeks or months, we could see the stock gyrate or move in a range, and that would be a good opportunity to accumulate. Some of the important pointers with respect to the company is that it is India's largest manufacturer and exporter of auto components and among the leading manufacturers of industrial components. And 40% of the revenue from comes from CV sales, and 15% from passenger vehicles. It is the largest exporter of auto components from India. Oil and gas is one of the major revenue contributors in the industrial business at the moment, and it has won new orders worth around 1,000 crores across automotives and industrial segments over the last 1 year. So the company is doing well on the order book front on the types of orders that they are getting. A new aluminum and forging facility at North Carolina commenced operations, and the capacity is already sold out at the moment. And in both defense and aerospace, the company is moving towards new products and launching new products from FY23 onwards. The company has also filed 76 patents, out of which 12 patents are granted till date. So during the FY22-23 year, in this FY22 season, 3 patents applications were filed and a grant of 6 patents were given. So over the next 3-4 years, it is expected that out of 76 patents, around 35 to 50 should get approved, and the company should have more business coming through from most of the segments that they are applying to. The company has acquired 100% control of Sangvi Forging and Engineering Limited, and this is one of the acquisitions that they have done from the cash that they have on the books. Plus, company has signed the SPA agreement, as I mentioned, to acquire JS Autocast, and hopefully that business should begin producing results from the beginning of FY24, and the numbers should kick in from there as well. It reported its first quarter of loss in March of 2020 since 2010. So over the last 10 years, the company had reported very good profitability growth, but during the pandemic over the last 1 or 2 years, the numbers were pretty subdued. But things have picked up, as I mentioned, in the last 1.5 years or so, and they are looking to launch a suite of products and subsystems for EV applications by end of 2023 or FY23. So hopefully that would also kick in terms of revenues and profitability from FY24 onwards. In terms of valuations, the current EPS for the company is around 23 rupees, that is for FY22. I expect that in FY23 the EPS should grow to around 28 rupees, and with more you can say government orders for defense coming in FY24, the company should have better profitability, and the EPS should swell to around 35 to 40 rupees. So I have taken in an average EPS of around 38 rupees for FY24. We could see the stock trade at a PE of around 35 by that point of time, which is an average PE for the company over the last 3-4 years. So a medium term target of 1300 to 1400 is a possibility over the next 2.5 years. 1330 is a possibility. It could very well go up 80 to 100% from here over the next 2.5 years. In terms of technicals, there is strong support around the 700 levels, and it is breaking out at the moment and can surge once it takes out, say, around 820, 830 levels. Once it closes above that, then it becomes a very good short-term buy as well. Support lies at 730 and 700 levels. I don't see 680, 700 broken that easily. So any dip towards 700, 680 levels will be a very good buying opportunity. So in my opinion, from a 3-year point of view, it's a buy at these levels and on dips. Short term as well, it looks good, but probably on a short term basis, buy above 720, 730. 820, 830. But from a long term point of view, this looks good for a very good 25-30% CAGR over the next 3 years for the company, and so it's a very good buy from a 3-year point of view. But do keep stop losses in place and allocate less than 10% of your total holding into such stocks. So this was a video on Bharat Forge. Please like and subscribe my channel and hit the bell icon so that you get my video straight away when I post it, and kindly subscribe to my Patreon network. Thanks a lot for watching.